All right, welcome in. So you've got your fall market update for Central Ohio. We just had some big news on interest rates come out yesterday. And in addition to that, we've got some great steady home price appreciation and more supply than you might expect. So let's dive in, take a look at what these numbers look like. Okay, so we're going to talk about rates in just a second, but before we do that, let's talk about a couple of the other key figures that we're looking at. So first off, absorption rates. Absorption rates are up to 2 months supply of inventory. You can see the trajectory here. So we're actually at the highest point so far this year for absorption rates, and that comes in August. Basically, we're still in a seller's market, but it's definitely a much closer to balanced market than it has been throughout this year and even throughout the past couple of years. And one of the reasons for that is where we stand with new listings. So year to date, new listings are up 8% in Central Ohio. That's a great number for home buyers. And like I said, the market is approaching more balance, but it's definitely still a seller's market. We would say anything below 4 months supply of inventory is a seller's market. So we're at 2 months supply of inventory, but certainly better than the less than 1 month supply of inventory that we had been used to for a long time. So it's a great thing. If you are looking to buy a property, whether it be primary or investment, now is certainly a time to be looking at that given those two data points. On top of that, where we are with home price appreciation, up about almost 5% year to date. So steady home price appreciation, I think a good, strong number for where we are in the marketplace today. So let's real quick look at interest rates. According to the national surveys, rates are at just over 6% today. Actually, had seen them a little bit lower a couple of days ago. So the Fed news that came out and said they were dropping rates actually brought rates up just a tick. Remember, the Fed rate is not the same as the 30-year fixed, which is what most people look at when they look at interest rates. What we can take away from the announcement to reduce the rate by half a point from the Fed is that we are going to see relief in interest rates over the next few months. And so this is a great sign for buyers, really just a great sign for the market in general. But what happened was they had announced previously that we were going to see a rate reduction. So leading up to this, lenders had already priced that into their rates. And so we've actually seen the best rates recently as we have in months. Probably, I don't know the exact statistic off the top of my head, but I think it was from sometime like February of the previous year. So rates are, hovering in the high fives and low sixes. If you get a good buy down, you might be able to put yourself into the mid or low fives. And to me, that's a great deal. So keep your eye on that. We typically see more hesitation in the market leading into election, and then after election, usually things bounce back to normal. So those are a couple of market factors that we don't know exactly how consumers will react. But lower rates sort of are in contrast to election and hesitation. So those things come together. I think it's all about affordability, though, and if the numbers make sense, there is pent up demand, and I think we're going to see that demand increase with better rates, especially once we get past elections and even past the holiday season. Then I think we're even going to see a lot more heightened demand.